Hi everyone, this is Finance Meets Real Estate. We have an awesome guest here today. It's Michael Flight. He's the founder of Liberty Real Estate Fund, the founder and CEO of Liberty Real Estate Fund, and he's a founding principal of Concordia Realty Corporation. He has about 30 years of institutional real estate investment experience in net lease properties. And Liberty Real Estate Fund is the world's first single tenant net lease security token offering. He's going to talk about issuing a real estate fund on the blockchain, which is a topic I'm personally very interested in. I'm sure many of you are as well. So with that, I'm going to pass it on to Mike. And yeah, as we mentioned before, if you guys have any questions, do put them on the chat. That's the easiest way to manage it during the lecture. We would also open up for a more direct discussion at the end in the Q&A. And yeah, that's all. Yeah, thanks. Go ahead, Mike.
So do you mind if I share my screen, Stefan?
No, go ahead. Absolutely. That's great.
Okay. So, so what we're going to address today is real estate tokenization and, blockchain and how that works together. We're going to just start off with a little bit about I've been involved with real estate since 1986. We started Concordia Realty in 1990. We've been through 4 downturns now, and we've had institutional partnerships with family offices, hedge funds, foreign investment funds, real estate investment trust, and insurance companies. And then we've done what are called workouts for banks, which is when banks will foreclose on a property. We've done that as well. So we've been around for a little bit. We have primarily done shopping centers and single tenant triple net lease properties. And one of the things that we found out is that a lot of people don't have the experience in triple net properties. It's more guys that go into commercial are in commercial versus the multifamily or the single family rentals and things like that. So we did start the Nothing But Net show, which gives a little bit of more information on how to go about investing in triple net properties. We also have the Chicago Blockchain Real Estate Collective meetup. We've got one coming on Thursday night, and it's a guy out of New York, Stefan. He's going to talk about, because he's actually facilitated property purchases with Bitcoin, but he also is very involved with the Wall Street Blockchain Association. And then we decided that we're going to put together the Blockchain Real Estate Summit in September in Austin, Texas. So we're pulling that together, and that should, come up soon. So a lot of people ask me, it's like, well, how did you get into this? And actually earlier, in 2014, people started talking to me about Bitcoin and, how great it was. And I always tell the story that I don't really do math, and I went to a public school, so math is not my, strong point. So I didn't understand the algorithms and all the rest of it. And I just said, well, it's basically like fiat currency. There's just a software behind it. So I don't understand. Why wouldn't you just tie it to, something like nice and super stable, real estate? And so then when I started thinking about it through more, and I knew people that were raising, I knew one company that stole, probably $1 billion in like 2017 doing an ICO, which is a initial coin offering. And I'm like, these guys, it's like, they're all scams. Why wouldn't you do a stable coin? Why wouldn't you get cash flowing real estate from some of the safest properties you could possibly do, and have, a coin that actually not only appreciates in value, but has cash flow? So my idea was crypto with cash flow guaranteed by the tenants that I know well, which are, medical tenants, convenience stores. I mean, Bridgestone, Firestone, and 7-Eleven, those are billion-dollar corporations. And so that's really what it is. And what we thought we could do was an ICO. And then I was told by my attorneys and everybody else that, I got involved with that. Those, number one, are illegal. And number two, you need to do something that is legal. Otherwise, you're going to go to jail and get fined a lot. So we started with that premise, and then we moved on. So, but the really big thing that inspires my imagination is that you can see here that global real estate, this is including houses and commercial real estate, is $280 trillion. So what if you could bring liquidity to even a portion of that? I mean, not only would you create all kinds of value, but you would also increase the value of real estate because you get a liquidity premium. And the other thing is, so like, let's say that there's somebody with, some land in the middle of like Africa, or land in the middle of Iowa or something like that. If they could get the ability to just leverage that and use that as leverage and unlock that liquidity, number one, it just creates more capital for the entire world, and it creates global, I believe, more global human flourishing. But the other thing that I was looking at in terms of launching a coin is, anybody from anywhere in the world, it can invest in crypto. So you don't need to be located. Like, I know Fletcher is down in Mexico, and there's people all over the place. You don't need to be physically located anywhere to invest in the crypto, and you can actually keep your crypto outside of the country that you're in. So the really cool thing about this is like, well, what if anybody anywhere in the world could invest in a London office building, or invest in a New York apartment building, or something like that? You could invest $10, $5, and eventually, in the very near future, within 5 to 10 years, there's going to be just a phone app where you can invest in high quality commercial real estate. And it's coming soon. So we're at the bleeding edge of it, but it is going to be there. So what is blockchain? And I apologize if people do know some of this stuff, but I just want to make sure, because with real estate investors, some people know what's going on, and other people say, oh, it's crypto, it's scary, I don't want to get involved with it. But blockchain is just basically the rails of the new financial system. So blockchain are just basically networks, and smart contracts connect the issuances to that network so that you can trade and you can do all sorts of other things. And so what's really cool about the crypto markets right now is that there's 24/7 trading. I mean, these things just trade constantly. So, and they trade all over the world. And that's eventually stocks and everything else is going to trade the same way on the rails of the new financial system. So just to give you an idea of what blockchain is a series of information. So, and it's all cryptographically done. So if you start out with the first one and you get this, in the next one, a transaction happened, and it takes all the stuff, all the information from the previous transaction, and puts it in the new one. So the great thing about the blockchain is it's a distributed ledger that's immutable. So it's hard to go back and change, because once it changes, everybody in the distributed ledger network finds out about it, says, oh, no, you can't do that. You're doing that. And then a smart contract is just basically like a vending machine. So if you really want to get involved with a dumb contract, let's say you wanted to buy a water from a vending machine, you put your money in, and only when you put your money in does it dispense the water. The smart contract is the same thing. It's a software program that will only execute if certain terms are met. So we'll go into that a little bit later when we talk about trading. But I just wanted to give you an overview so that the other stuff kind of makes sense. So when we're talking about blockchain, and most people know what Bitcoin is, and most people have heard of Ethereum. but there's several types of digital assets. One is cryptocurrency. So Bitcoin and Litecoin and Monero and a few other ones are straight cryptocurrency, and they're more like a store of value. Bitcoin also is, running on a blockchain, and they were the ones that were the proof of concept that a blockchain could work. But there's other ones, what we like to call protocols. So like Ethereum, Algorand, Polkadot, and some other ones are more like phone companies. They're networks. So that, for example, Ethereum is you issue smart contracts to it, you do things to it. So it's kind of part software project, and it's kind of like a communications network like Verizon or AT&T. And then there's utility tokens, which you just, for the easiest explanation of a utility token is airline miles. So airline miles, you do something and you get some sort of benefit from it. And so that's where the utility tokens come in. There's also things like databases and things like that. So you can pay into the database and then you'll get, benefits out of it. Like there's a medical database. Another utility token is, I don't know if you've ever heard of Brave browser, but you can get tokens for watching advertising on Brave browser. And then there's project tokens, and those are up here. So the bottom part is the internet, the blockchain layer where everything runs on. This is the communications network. This is the distributed ledger network. And then these applications up here. So project tokens are basically like software projects. So if you're investing in those, you're investing in software projects. And I did forget to, mention the cryptocurrency that I like, which is USD. It's right up here. USD runs on a few different networks, but it's a stable coin tied to the dollar. And so we'll get into that a little bit later. And then there's asset-backed tokens, which is what we're going to talk about right now. So there's basically two different types of two types of asset-backed tokens, and one of them are non-fungible tokens. I think you've all heard of those, especially with the NBA Top Shots and things like that. But another non-fungible type of a token could also be a car. You could tokenize your house as an NFT. But what we'd really like to talk about now is security tokens. And security tokens are regulated securities. And the reason why they can be issued and they're not non-fungible tokens is because one security, if you're selling shares in a fund or something like that, like ours, one share of our fund is the same as the other shares of our fund. So if you get, whether you have 10 tokens or 20 tokens in the fund, each token is one share of the fund, and it gets treated all the same. So what can be tokenized? There's already been a initial public offering. Exodus Wallet did an IPO with our issuance platform Securitize. So they issued directly to the public. They did a Regulation A offering. It's the first ever self IPO. So they did it directly to the public. They did a $75 million raise. They raised the money in, I think, about less than 90 days. They're really an interesting case
Sorry
study.
to interrupt. If you can just set to full screen, if that's okay.
Sure.
The slide. Just that's appreciate. Thanks.
All right. Can you see it now?
Yeah.
All right. And then Nomura has and also a number of different French banks have issued bonds to the blockchain. We've even had on the Chicago Blockchain Real Estate Collective a whiskey fund that was investing in Kentucky whiskey. There's also Cask Coin that invests in Scotch whiskey. Spice VC, there's like a number of different tokenized venture capital funds that you can invest in. So what we're most concerned about is real estate. In real estate, The value is locked up. It requires typically a large amount of capital. And, how do you, number one, raise money for that? Well, if you're raising money in a private placement, that money is locked up for 5, 10. I can tell you that my mother just got out of last year a syndication that my dad invested in probably in 1985, and she couldn't get out of it until 2020. With the tokens, it allows things to be tradable, and it allows for smaller shares because a lot of it's automated so that you can do distributions a lot easier, and it makes it easier to do. So for example, a real world example of this is the St. Regis Aspen coin. It's the St. Regis Hotel in Aspen, Colorado. They issued it back in, I believe, 2019, and they sold out the coin, and then they issued it onto an exchange. So now it's on the secondary market. So the initial exchange listing was at $1.21. So it was an $18 million market cap. Right now it's at 22.5. So it's trading above its market cap. It has traded below the initial offering, but for the most part, it's mostly traded above the initial offering. And that's really amazing when you think about it, after how hard hotels were hit by COVID. This asset's been doing fairly well. So one of the things that that is interesting about a security token offering is not only do you get worldwide access to investments, so you can invest in a security token anywhere in the world. They are regulated securities. You have transparency, so real time, mark to market, what's going on. There's a lot more transparency. You get fractional ownership. So for example, let's say in our fund, you bought and our tokens are going to be $10,000 a piece. And if you bought $100,000 of that, you wanted to do estate planning, and you had 2 kids, and you wanted to retain some for yourself, you could potentially say, all right, I'm going to give one child $30,000 worth of tokens, the other child $30,000 worth of tokens, and retain my $40,000 worth of tokens. It's very difficult to do right now in private real estate. It's also very difficult to slice and dice, even if you own a real estate investment trust. I mean, you could do that, but this makes it a lot easier. Plus, you have faster settlement times, like we were saying with the smart contract before. If Stefan was selling a token in you do apartment buildings, correct, Stefan?
I do multifamily.
Yeah. So if Stefan was selling, he tokenized one of his apartment buildings, and he said, well, I want to sell a share of my apartment building. As long as we agreed on a price, let's say he was selling his tokens at $20,000 a piece. And if I said, oh, that's a good idea, as long as Stefan puts up the token and I put up the $20,000, the smart contract automatically allows it to go through. That's called peer-to-peer trading. You also have enhanced things so that the number one, the distributions, like on our fund, it's going to be a monthly distribution.
Interject. I just have a question,
Sure.
Because in regards to the fractionalizing, now is that actually something that's accomplished due to blockchain? Because it's sort of shares in an SPV, right? So that the fractionalizing really was achievable in the past. It's more like the other efficiencies that one is after with.
Right. Well, if it's a fund, it's in an SPV, but you can actually take one of your buildings and put it directly on the blockchain and fractionalize it. So that would be the tokenization part of it. So you are correct. You could fractionalize and do all sorts of things, but this one, you could actually have the full title, everything about the building. That's why I said you could do even NFTs of your house where you've got all the title, everything else, and you could just say, I'm going to sell actually, timeshares of, my house. So people, instead of Airbnb, they can like, invest in, I want to like, rent out your house for us. You can just, it gives you a lot more flexibility on what you can do with it once you tokenize it. And then the cash flow distributions, there's a company out in Florida that's actually tokenizing smaller properties, mainly in Detroit, Rochester, New York, and I forget, they just did a deal on the south side of Chicago, and they actually say that they're paying out monthly, or I'm sorry, daily income. So I don't know, to me, it gets a little bit difficult because if you're running a commercial property, you usually close it out once a month. But if you invest in RealT, which is realt.co, and some of their stuff, they're paying out daily distributions. So it's just because of the automation helps with that. All right, so
Can I ask a quick question? I'm sorry.
sure.
My naivety about this. I've been in real estate for over 50 years and I'm a broker in California. I am concerned about title. Where have we gone with guaranteeing the blockchain title situation? In other words, how do I know if I'm investing in this property, whatever it is, that it's free and clear of all other liens and loans and other problems?
It would be the same thing. So you'd start with the normal title process. And the nice thing about the blockchain is once that title report is, fully in there, then any other changes to the title would show up in the blockchain. So if somebody decided to change the title, it would show up in the blockchain. So it's actually
not necessarily. I mean, that's very naive. Seriously, I mean, title insurance is something that you buy.
right,
You pay for that at closing.
right,
You see it before closing, and
right.
you understand this is the title. There could be a loan on the property. The loan needs to be paid off.
Right.
It's not going to be paid off with Bitcoin. It's got to be paid off with cash. So that's one of the problems I'd like to get through. But
I don't see if you're still going to get the title insurance, and
yeah, right.
you're still going to go through all that, and then there's other there's a lot of
Well, is BitChain, is there a BitChain title insurance company or somebody that will step in and you can buy BitChain title insurance, or are you is this just free willy to? I hope that nobody's, you talk about your mother's syndication that was back in the 1980s. I mean, she could sign her interest over on a piece of paper to you or anybody she wants to, and that could be collateral for something. I mean, how do you?
Right, but there are very specialized companies that do this, but it's not widely tradable. And going back to your title thing, there's a lot of companies, especially title companies, are looking to put the full title on the blockchain because
that would be the answer. That's to me. I mean, when you say that do we have that now?
No, we don't. I mean, but blockchain really, it's been around for a while, but for all intents and purposes, there was never a use case until Bitcoin, and Bitcoin came around in 2010, I think. So we're literally talking about 11 to 12 years. And if you take a look at the amount of large financial institutions, you take a look at a lot of title insurance companies and all the rest of this stuff, the title insurance companies really like it. The main problem is that you have to have what they call off-chain things to make sure that if somebody puts a lien on the property, it shows up on the blockchain. But other than that, it's much better than a normal title policy because anybody can go in there and look at it, just like anybody can go in right now and look at what's going on with the title of a property, but they have to go into the county records. Like, I live in Cook County.
But
So
that doesn't, no, excuse me. Recording documents and not recording documents, as I was talking to at the last seminar, an attorney who actually said he owned the title company,
Mhm.
that recording a document or not recording a document doesn't make it legal or illegal. It's a recording a document just puts
But
the,
we're not talking legal or illegal. We're talking about you.
well, but it just puts
If
the
there's
world
something
on notice that
that
somebody
you
is
put on your
doing
title.
something.
Yeah,
You know, recording a document just puts the world on notice
right.
that somebody is doing something. You don't have to record a document to make it legal. You could still do something. You could transfer title to your wife, your spouse, or anybody you want without recording a document.
No, I understand that, but at the end of the day, like I said, I don't want to really title
Yeah,
insurance and
I'm
title
sorry.
is not my
I don't want to break up your seminar. I just need to get to the meat of what it is. Because
right.
I have people that want to transfer property with cryptocurrency. And the only thing I see right now is converting the cryptocurrency to cash. If there's an existing lien on a property, it needs to be paid off. The lender who lent that money doesn't want to take cryptocurrency. They
Well,
want,
let's back up there, and then we'll start forward.
yeah, I'm sorry, and I apologize.
Cryptocurrency is just exactly the same thing. Like, you could actually decide to pay for your house with oranges if somebody decides to take them.
Yeah,
So, and they used to trade with shells. So it's really not that much different. You do have to, like, right now, no banks are going to, like, some banks will. So, like, we bank with Signature Bank out of New York, and they'll convert it, but it still has to be converted back into fiat currency. So we're not saying that everything's going to go to cryptocurrency, and we're not saying that this is cryptocurrency. There's cryptocurrency, and you either pay with dollars, you can pay with euros, you can pay with Bitcoin. But at the end of the day, it's still the same transaction. At the end of the day, you've still got the same chain of title that you have to deal with. You've still got all the different things. This is just a different way of, number one, investing in, and number two, raising money in real estate. So, but there will be other things which I'm not going to address right now because I am not as
but look, Mr. Flake, I'm with you all the way. I'm not against you. I'm for you. I love this idea. Back in the days when Jimmy Carter was president, interest rates were 18%, nobody was selling real estate. I took a car as a down payment on an apartment building. I mean, that call that came in, I would thought, whoa, this is crazy. Who's going to put a car down and who's going to take a car?
right.
And I had the lady's telephone number, and I said, you have your down payment, because you back in those days, you needed 25% to put down, and but interest rates were so crazy. Anyhow, I thought, well, maybe she had a Rolls Royce or something. So I called her back and I said, well, what kind of car you had? And she said, I just bought a Lexus. It was the brand first year of the 1990s that the two-door coupe came out. She paid $50,000 for it. It was brand new. She drove it around a couple of days. She didn't like it. And she said, I want to use it. And I took that car and traded it into an apartment building for her. So I'm on your side, okay? I am with you all the way. I'm one of the few people that you would be talking to that would say, I'm interested, and I'm really, really interested. But I want to get down to the nuts and the bolts and the nitty gritty. And I'm happy that you're explaining this, but I just wanted you to know, I'm not a negative person, okay? I'm a positive person.
Well, why don't you let me try to get through the rest of this? And
Yeah, I
then
apologize.
if I can answer your questions, I will. And if it's something that I'm not an expert on, which I will clearly tell you I'm not an expert on everything, then we'll do it. But the main thing, as you were bringing up, Steve, is that you could say blockchain, you could say cryptocurrency, you could say all this stuff. The deal really has to make sense. Does the deal make sense? Is it a good deal, or is it a piece of garbage? Okay. If it's a piece of garbage, nobody's going to want to invest in it. Nobody's going to want to, and it's like, you're just selling, the same stuff that you can't really even sell, in person, or you haven't been able to do before. So number one, does the deal make sense? number two, is it a quality investment or a dog? So the big meme out there right now is Dogecoin. It's at the end of the day, it's just, garbage. Don't get caught up in the hype. Don't get caught up in, there's good stuff, there's bad stuff. So we, have found out that security tokens need a team. So basically, as we were talking about before, you're taking your paper shares and tokenizing them. Our tokenization platform is securitized. And so they write the smart contracts, and everything is done through the token at that point. But you still need your issuer, the general partner. You still need people that know a little bit about what they're doing. The reason why I was so interested in doing this back in 2017 was there was probably 4 or 5 real estate ICOs that were attempting to raise money, and some of them actually did raise money, but none of them had any real estate experience. They were, guys that were, all tech heads, and they had no idea how to actually invest in real estate. So they're just saying, oh yeah, we're going to raise, billions of dollars. We're going to go out and buy real estate.
Right.
So it really comes down to, is the sponsor good? Do they know what they're doing? Can they put together the deal? Have they done the deal before? That type of thing. The real big thing that we found out, and we spent, hundreds of thousands of dollars, was on the legal counsel and the tax counsel, because the laws were changing up until about, they finally were kind of cemented in 2020. But with that, you need to have an attorney that's not only competent in securities laws, but they also need to know a little bit about, digital assets, which are, tokenized assets. And so our attorney had done a number of successful offerings in the past. So we're very happy with the counsel that we've gotten with them. And then since we wanted to have both US and non-US investors, it took extra time for us to figure out the most tax efficient way to allow non-US investors to invest in US real estate, because non-US investors are punished for investing in US real estate. And then, like I said, our tokenization platform is securitized. You want to make sure that you go with somebody that's done this before, and so we chose Securitize. We interviewed, I want to say, 7 tokenization platforms, and there's more cropping up out there every day. And we'll get into what some of the things that you need to look at. But you need somebody that not only understands, the technology behind it, but also understands the securities laws. And if you're doing—
Can I ask you a question? I was just thinking about that. On the blockchain, if you're in conventional stocks with a brokerage company, they keep track of everything you buy and everything you sell, every dividend that you get.
Right.
Does the blockchain, like, let's say this is somewhat of a REIT that someone's putting their money into, and they're paying out cash flow daily, weekly, monthly, is that trace? I'm not saying traceable, meaning not to be revealed, because I'm honest. I pay for my taxes. I have nothing to hide, but
Well,
I like to keep track of everything that comes through me.
So people keep saying, well, Bitcoin is untraceable. It's traceable. Okay. It's in a blockchain. It's in a ledger. So they can trace where, even if they don't know your name, they know, the number and the block and everything else where you're at. But these are security tokens. So these are regulated. So these are definitely traceable. So you're going to get a K1 at the end of the year, and it's all legal. It is traceable. But the reason why we also went with Securitize is because they are a registered transfer agent. So in the United States, as you were talking about, Steve, you need a registered transfer agent, which is registered with the SEC. so that they maintain all the records of who owns it. They maintain, and all the distributions that are going through the token are going through our registered transfer agent,
Is
which is,
this, and pardon me, is this called centralized versus decentralized?
it's still decentralized. It's just that even if you've got, so, so like the guys that issued the IPO, their company directly to the public, in the United States, you still need a registered transfer agent that legally pays out all the stuff.
Okay,
So, but the other thing about security tokens, which doesn't happen with cryptocurrency, somebody, if they figure out how to steal something, can steal your cryptocurrency. With security tokens, if something happens with those where, you know, the somebody decides to steal whatever and figures out how to steal the security tokens, those can be burned by the registered transfer agent and reissued to you, so that or let's say that the transfer that you're sending, you know, your tokens to somebody, and the transfer doesn't happen, or it goes to the wrong location, which is what happens sometimes with cryptocurrency. If the registered transfer agent can track those down. So that's what's good about the security tokens versus the cryptocurrency. Sometimes,
I gotta tell you, I really like what I'm hearing.
yeah,
And I'm just getting into this, so, but I go deep. I go
Yeah.
really, really deep. I do my research and, you know, I just did
I
my
gotta
tax,
tell you, we,
I just did my tax returns and, you know, the IRS, they ask you, did
Right.
you buy or sell any crypto? So that tells me all of this negativity about crypto is nonsense, because the IRS wouldn't be saying to you, you know, in your tax return, if you were doing something that wasn't legitimate and making it legit if you did. I mean,
right,
you know,
well, you
so
know,
I'm all for what we're doing and what we're
Fidelity,
trying to do. And I know what triple net leases is. I've been doing commercial property, residential property, rental properties, tax deferred 1031s exchanges, daily rentals, weekly rentals, vacation rentals, long-term rentals. I've done it all of it, every single thing, which is rare because most real estate people will only do residential, or they'll only do commercial, or they'll only do this, or they'll only do that. But I did it. I happen to be, you know, in Palm Springs, California.
I've done a lot of that, but I can tell you, as being a broker since 1986, I have never, ever sold a house. So,
But you've done commercials, so
well, we've done, and actually, on a side gig, we, myself and a local broker partner here, we, you know, probably did around 175 fix and flips. We've done other things like condo conversions and things like that. But our main business is retail real estate.
I'd love to bring Stefan. Stefan, I want to say to you, I have a daughter who just came back from Dubai, and she wanted to settle in France and Italy. She wants to try. She's traveled all over the world, and she's 35 years old. And I just got to tell you, she wanted to get in France. She wanted to get in Italy. She couldn't because of COVID a year ago. She got into Croatia. Croatia was wide open. So she got into Croatia. She was there with her visa for 3 months. And from there, she flew into Amsterdam. And she loves Zurich. She loves Switzerland. She loves the mountains. She loves to hike. She was there for 3 months. From there, she went to South Africa. I mean, why would you? And I mean, I'm learning about stuff that I never even dreamed about through my own daughter.
Well, Stephen, I'm going to tell you that the great thing about
This is
this is
wonderful.
because it gets you outside the financial system.
Absolutely. It's just,
So I was in Dubai in October of last year, but, you know, and we had to transfer money from the United States to Dubai, and we did a wire transfer. They lost the wire transfer. So this is bank to bank. And
Sorry
they
to
couldn't
interrupt.
confirm the wire transfer for 7 days. So if it was, I sent you, like, let's say your daughter was living in, you know, Dubai or South Africa, and I was going to send her money, and I could send her US dollar stable coins, and I could send it immediately to her, and she would have it that, you know, like within, you know, minutes. So versus waiting for the wire and waiting to figure it out. So as I said, blockchain is the future of the financial system. So one of the things that we were really interested in
Mike,
was,
sorry to interrupt. We're progressing with time, so let's continue, please. And any questions, let's move on to
Sure.
the end. Thanks.
So one of the things that I was really interested in is that the liquidity. People ask, well, how do you get liquidity? Well, number one, you can go through a broker dealer. You can go person to person. You can go business to business or person to business. There's also alternative trading systems like licensed in the U.S. where they're matching services. And then there's exchanges. So in the US, there's T0 and Open Finance. And at some point, Coinbase, who we're also working with on our custodianship, they're going to be trading security tokens. So these are going to be available on a number of different exchanges. So what's in it for investors? Well, the really great thing that we were talking about before is liquidity. They can be traded after a 1-year lockup period. If it's accredited investor to accredited investor, the tokens can be traded after 3 months. So basically, if you don't like it, you can get out of the deal within 3 months if you're an accredited investor. And after a 1-year period, the tokens can be traded to anybody, including non-accredited investors. It's 24/7, 365 days a year. What's really cool, and what I was getting at with Stephen, is the currency options. So you can take your distributions from us, you can get an ACH payment directly into your bank account if you want to do things the old fashioned way, or you can get paid in a US dollar stablecoin or Ethereum. If you get it paid in a US dollar stablecoin, it will go directly into a wallet where you could potentially earn more yield off of that. So we did a agreement with a company called BlockFi. So you can kind of dollar cost average out of the dollar by accepting the returns from our fund and then putting in a USD stablecoin. And so if you had the ACH payment, what do you think your bank would be giving you? It'd be giving you right now less than 1% interest. With BlockFi, they're paying right now anywhere from 7 to 9% interest. And again, we talked about the fractional ownership. We talked about, so this is what Stephen was hitting on, that you could get, your money, you can invest from anywhere in the world, you can receive your money anywhere in the world. And as I've been trying to say, the future of all currencies will be digital. So just on May 21st, the Federal Reserve released a white paper. It's the digital dollar discussion paper that was released by the Federal Reserve. So the dollar is going to be this way. The Chinese yuan is already in digital format. I'm not sure how much you want to have a digital currency, because they'll also be able to know everything that you do with your money. But so that this just gives you extra options. And what we really like is the ability to create extra options for people. So, what we try to do with Liberty Fund is create the most stable returns. You can get extra information at libertyfund.io. We're investing in quality triple net properties that are backed by billion-dollar corporations. We like to describe them as bonds wrapped in real estate. So I'm more than happy to talk to you about anything, including the fund or any questions that you might have.
Awesome. Thanks, Mike. That was great. So, so in terms of I was curious how you got into it in the first place, and how do you stay up to date with all the information. The reason why I'm asking is it's a really small niche field right now, right? So it's very few people who are doing it. There are fairly few, investment managers in real estate who are currently doing it. And I was curious, how do you get informed? This is great information.
It's surprising that there are people doing it. There have been people trying to do it, for the last 3 years. It's just that the laws weren't in place to do it. Actually, I keep telling people that there's a lot of vaporware out there. That's a term that they used to use for software that really wasn't ready for release. And so there's a lot of people that talk about, oh, we can do this, we can do that. And, it turns out that, some of the technology is not ready for prime time. And the other issue that we found out is that sometimes the technology can do it, but it's illegal to do in the United States. So we had to navigate through that. But to answer your question, I was just hanging around, I want to say Austrian economics type people that were, really, kind of down on the dollar and kind of down on the amount of debt that the United States was printing, and also looking to, for kind of a plan B in case, everything. And some of these people are just always, like Peter Schiff, who I know, and I've met a number of times, and, we've had dinner and things. And I think he's called, two of the last, 10 recessions, or, so I forget what it is, but he keeps calling recessions every year. So, but, sooner or later, these people are right. And I just hung around with a lot more smarter people than me. And it's like, I realize that if you take a look at, again, the people, the companies that are doing this, JP Morgan, Goldman Sachs, Fidelity, Mass Mutual just put, some of their investments into, digital assets. So this is the wave of the future. We might be really, really far ahead of it, but I think, most real estate at some point is going to be traded like this.
Question, your triple net properties, I would think you have triple net leases that are really real solid people, right?
Yes. Yes.
That have the history. These are properties that are probably owned by individuals that did a 1031 tax deferred into their properties. Most of commercial triple net leases are 1031s. How are they being ultimately, whoever this property is, being cashed out of it? And when you talk about things being illegal, I'm not so sure there's anything illegal about anything. So where does this illegality come when you mentioned it twice in your conversation?
Right, so I'll answer your first question on we're buying the properties all cash, and then we're going to leverage them as a portfolio. So
right, I got it.
The owners that own it now are no longer involved with it.
I got it.
Number two, there is certain things that would be considered money laundering, in terms of, so you have to do what's called anti-money laundering checks. You have to do accreditation checks, and you have to do know your customer checks, which if you really look at it, even in private real estate, even though a lot of people don't do it, but you're obligated by you're
I remember there were days when people would bring suitcases full of money to buy. I mean, I go back that far, but you can't obviously do that.
I was talking to some guys in Dubai, and they said some of Stefan's countrymen show up there and buy real estate with trunks full of cash.
But that's good when you're acquiring the property and you're paying cash. You know what that does? That establishes that the liens or whatever was prior to you taking the property over is done and over and gone with. You don't pay cash for a property and still have $1 million loan on it.
And to just, Stefan kind of hit on it. We are not tokenizing the individual properties. The individual properties will be owned by the fund, and the fund is being tokenized. So we're still doing all the same, due diligence. We're still getting, title reports on every single property that we buy. So it's all the normal things that you would normally do in buying real estate. What it really does is just give our investors extra benefits, which is what we're trying to do, is to create something that gives liquidity, gives currency options, gives extra earnings options. So Stefan, I know you had a question.
Yeah, understood. Yes. So precisely on that, Mike, actually, so you're, to your point, it's a security token against your fund. It's not against individual assets.
That's correct. That's correct.
somewhat perpetual into the future, I assume, or how to say, like, so in that sense, what is the difference between, you know, any private equity fund being tokenized and what you're doing with the Liberty coin? Is there an additional layer of sort of is it traded only on T0 or it's traded on other exchanges, or like, I mean,
It'll be available on other exchanges. So
Yeah.
it really depends on where we list it at. It'll be listed at securitized markets. It'll be listed on T0. More than likely it'll be listed on Open Finance. And then we're working with a Singapore exchange called InvestaX. We're also working with a Swiss exchange called SDX. And there's a few other exchanges out there that we would list it on, depending on how big the fund grew.
Are you finding it easier to raise capital currently, or is it the initial step?
If you really wanted to do the most difficult thing possible, you would do this. So it's not,
yeah, that's true.
But I think at the end of the day, it's going to be something that, like I said, that everybody is going to be doing.
Got it. Okay, so let's go over a few questions on the chat. So we have, a few questions. So, first question, will, like, the property managed by whoever owns 51% of the tokens? I assume no. So to your point, it's tokens against the fund itself. Now, I think this has to be only a fraction of the corporation. So you could.
Can I just address that once more?
Yeah, sure.
Aside from, we didn't want all the money in, tied up in one property. So what we're trying to do is get geographic diversification, industry diversification, and also credit diversification. So that's the reason why we really wanted to do a fund instead of just one shopping center or just one Dollar General or something like that. We wanted to get it as stable as possible. So thank you for letting me answer that.
So the fund is in all of these properties. So whatever happens to property A is going to also result to property Z. If there's positive and negative.
Right, but let's say that there's a hurricane in Florida, it's not going to affect the property in Colorado and stuff. So, versus if you just had one property in Florida, that would be wiped out and your stuff. So anyway, Stefan, there were some other questions.
Yeah, sure. Yeah, so I mean, and so first of all, like, just broadly, like on all the prior discussions that we had, I just wanted to clarify, like, I think at least my understanding has been from other, like, real estate tokenization meetings that, broadly speaking, all the SEC paperwork and, title work and everything stays the same. It's sort of like an overlay on top that, okay, we have the additional tokenization work done, and it's kind of an added benefit. There's no loss of any of the existent, legal or regulatory or, or title transfer structure, just like putting it out there for our audience, to kind of.
You are 100% correct. So
Right.
it could be a Reg A, it could be a 506B, it could be a 506C, or it could be a private REIT.
Yep. Okay. Makes sense. And then, okay, so from there, like a few questions. So what do we have? So I think we have like more like comments. So the operators, managers, trustees don't have to be coin holders. Coin governance is important. Do coin holders have the right to vote, or are they limited partners?
This would be a limited partner. So it'd be the same thing as investing. So this, certain tokens and certain coins out there have, governance rights. This is more along the lines of a regular 506C. So there's a general partner and then there's limited partners.
Yep. Yeah, makes sense. So it's really, it's really the same SEC 506C, 506, B structure, like to your point, to your earlier.
I will say that this gives you a little bit more flexibility that if you don't like the governance, you can vote with your feet.
Okay.
Goodbye.
Well, I'm not trying to be flippant. I'm just saying that, as an investor, I would have liked to, gotten my mom out of that thing a long time ago. But, there was no market for it. And, you couldn't really borrow off it or anything else. And it was just there. And it just created extra tax hassles. If this is a situation where it's not a right fit for you, you can just say, okay, I am, going to list it on an exchange. I'm going to find somebody else to buy it. And, it doesn't work. I'm moving on. So it's a lot nicer than a lot of normal private real estate.
I'm still missing the point of the profitability in doing this with a bit with cryptocurrency. What is the positive results of the coin? That is it just that I'm trading apples for oranges? And now, but if oranges became worth more than those apples, where do I see? If I'm just holding coins and I'm trading coins, what do I get?
Well, number one, you get regular monthly cash flow. You get,
I participate in the cash flow of the whole fund.
Right. And you get, the appreciation of the assets. You get the,
you really
do. And plus like I said, you get extra benefits. So most funds distribute on a quarterly. This is going to be on a, monthly.
Okay, well, if you have depreciation, then when you sell your coins, do you have to pay back the depreciation, or how does that work? When you,
I don't really want to get into that, but you do get depreciation. You do get that covered. It's in a K1. So,
yeah,
but
you get it. If you get it, you can give it back. It's up to you.
Right. So, like I said, that is a whole nother discussion, and
I got it. I got it.
It will drag us into, because I know there's other questions.
Yeah. Okay. So next question. So interested in how this works with wholesaling, foreclosure, subject tos, and or commercial acquisition.
I couldn't answer anything about wholesaling or foreclosures. I think you're going to do the regular thing. It's just that if at some point the property that you're buying is tokenized, there might be better financing options, or there might be things outside of, the normal banking system where, you could just borrow against it. Like, for example, we're working with BlockFi. If there's enough of a track record, then they're comfortable with the net asset value, you could actually, and this isn't done yet, but you could actually deposit your token with BlockFi, and they will lend you money against the token, so that you don't have to sell your token to get liquidity. You can borrow against your token. So I think, as things evolve, the way I see it, in 5 or 10 years, if a lot of properties are tokenized, there'll be more flexibility. But for right now, your normal foreclosure, your normal, property sales and all the rest of that stuff is going to be the same. This is just going to be an extra layer that, is more of a financing, and it'll give you more options for equity and debt.
Yeah, which is amazing.
There's also guys that we're going to have on the Chicago Blockchain Real Estate Collective in 2 weeks that they're actually tokenizing the equity in houses, so that you could go to them and investors will invest in your house, and then you can pull the money out. I just spoke with some other guys out of San Francisco that are putting together a thing. They were actually doing title insurance, and they were shopping for title insurance so that people could get better rates on their title insurance. And now they're going about trying to do tokenizing the entire house, and then you can pull out the equity through the token. So there's going to be a lot of things. There's going to be a lot of hit and miss. What I told a few of these people is you're going to run into issues with lending, because every state has lending issues, and then you've got like the Dodd-Frank. So like I said, a lot of these technology guys are just running out ahead of their skis. And I think some of it's going to really work well, and other stuff is going to run into, some regulation that they're going to have to work around. But I think it's going to be figured out.
I heard the OCC might get involved, and I know the OCC is like incredible. That, well, Wells Fargo had all that nonsense going on for 15 years. And you're going to tell me that they were looking the other way? They're supposedly the monitors of financial.
Yeah, this is regulated by the SEC, so we're not officially cryptocurrency.
So, yeah, next question. How does a token investor receive information for changes in the underlying real estate, such as a lease renewal? Does the SEC have laws around insider information for these types of securities?
I don't know. I honestly can't answer it, and nobody's ever asked me the question about insider information. We will be publishing net asset value. But what was the first part of the question?
Yes. So how does a token investor receive information for changes in the underlying real estate, such as a lease renewal?
That would all be part of our regular, information that we'd push out to investors, just like on a normal thing. So, and the great thing about the token is that what's really cool is Securitize has a fantastic investor dashboard. So all that would be pushed out. So you get a notification. There's going to be regular, reports as to what's happening, regular reports if somebody exercised options, regular reports on portfolio wide, what the industry mix is, and how much risk exposure we have to 1 to 2 tenants and things like that. So there's going to be a lot of information that you're going to have at your fingertips by just going to your investor dashboard.
Okay, and does Securitize have to use Ethereum, or can we use Cardano or another blockchain that supports smart contracts?
Everybody loves Cardano. So, but Securitize either can issue onto Ethereum or Algorand or Avalanche, and I believe they're working on Tezos. And we right now prefer Algorand because Algorand, number one, has really fast execution. They've got a lot more projects on their chain than Cardano has. And the issue that we ran into, is that Ethereum has things called transaction fees, which they call them gas fees. And so Ethereum was not only really expensive to issue onto, but it would also be expensive to pay monthly distributions because that would eat into the investor returns. Versus with Algorand's and Avalanche, both of their transaction fees are a lot less. And like I said, Algorand has assets on chain. Tezos has, real estate assets on chain. I'm not really sure. We've actually investigated 12 blockchains right now. We're doing a side-by-side comparison of 20 to 25, core metrics. And the two top chains are Algorand and Tezos. And like I said, we really prefer Algorand because Algorand not only has a foundation and has a lot of stellar quality people, behind it, but there's also somebody that you can call up if something happens that's bad. Versus a lot of these public blockchains like Ethereum, who do you call at Ethereum? Vitalik, Buterin? There's really nobody there. There's a foundation, but if something goes wrong, there's a lot less, things. But at the same time, what we really like about Tezos and Algorand is they have widely distributed networks.
Mm-hmm. Okay, and what are the estimated setup costs to raise a real estate fund using blockchain?
I can't tell you what it would normally be because we spent a lot more money since we were one of the first doing this, and it was hit and miss. But I can tell you, like, if you just went straight through a tokenization platform and did some of the other things, the legal fees probably right now I could give you some good attorneys that it would be just about the same. The accounting fees, if you didn't go international, would be just about the same. And then the tokenization would be anywhere from $30,000 to $70,000, depending on the service that you went with. So, but you want to make sure that your tokenization platform isn't just some guys that say, well, we're tokenizing real estate. You need to make sure that your tokenization platform has the licenses to transfer the securities. And so that's the key thing in the United States.
Mhm. Okay, so next question. As I understand, security tokens allows for non-accredited investors to invest, unlike a private placement memorandum.
Security tokens, if you do a Reg A, you can have non-accredited investors. It really depends on the offering. So more than likely in private real estate, it's going to be the same as it was before. It's going to be a 506B or a 506C, which are accredited investors. The main difference is that after the 1-year lockup period, non-accredited investors can purchase the shares of somebody from the accredited investor. So that's the really cool thing, because it does open up something that's traditionally only been to very wealthy people. After 1 year of seasoning, and you can kind of see what the performance of the fund is, you can invest in it as a non-accredited investor.
Mhm. Can you talk a little more about the income? You mentioned some partnership with, I think you said, a company called BlockFi. That's another question in the chat.
BlockFi, so you can take your distributions in USD stablecoin or Ethereum, and you can deposit those into BlockFi, and then BlockFi is similar to a bank in that it'll pay, interest. And the way they make interest is they either lend money to people that are borrowing against their cryptocurrency like Bitcoin, or they do these other things which are called staking, which generates regular income. And so with that, they can pay you a lot more than if you put your money in a money market or a savings account, you'd be getting less than 1%. And so, like I said, with BlockFi, if you deposit it there, you're getting anywhere from 7 to, I think, 9%. And I think there's some other riskier stuff that you can get in. I would be careful with some of that stuff, but on average, you get much higher interest rates, against crypto for your investing. And plus you get the stability, like I said, of the quality real estate there.
Okay. Okay. Yeah. That's very interesting. And then another question is: will the price of the tokens fluctuate since it's on exchanges? And what makes an ICO illegal? Those are two kind of
Okay.
questions. Yeah.
The price of the tokens will more than likely fluctuate on exchanges. We've seen, as I showed you with Aspen Coin and one or two other ones, that the prices actually went up because there's a liquidity premium. So people are willing to accept less, income to get the extra liquidity. So the prices have been going up, but I'm not going to say they can't go down. We're going to publish regular net asset value reports. So, and the income on the tokens. So, regardless of whether the token's trading here or trading here, the income on the tokens is going to be, paid out. It's a 5.5% preferred return. And then there's, what we're expecting is higher return on an annualized basis. And that's going to be paid out regardless of how the token's trading. But we believe that the token should hold their value because, you've got quality assets, like I said, that are bonds wrapped in real estate. And there was a second part of that question. Can you repeat it for me, please?
Yeah, that was actually a separate question. So what makes an ICO illegal?
Oh, well, there are ICOs that aren't illegal, but if people understand what the Howey test is for securities, if you're, jointly investing in something, if there's an expected return, if there's I think there's 4 points to it. I can't remember the other ones now because my mind's a little shot after all these questions that Stephen asked me. But if it, hits those 4 points of the Howey test, it's a security. And so, for example, a company called XRP they're going after XRP for, an illegal security sale. There's another company that they ended up having to pay back the investors and pay a fine. It's Telegram. It's, basically like WhatsApp. And, they went after Telegram and said, you did an illegal security sale. And so I forget how much Telegram had to, pay, but they had to pay all the US investors back, and then they had to pay a fine. So there's going to be a lot more because, the tax man wants what the tax man wants. And so that's why we decided we're going to do it legally with a security token. We're going to do it, per SEC regulations, and we're going to follow IRS guidelines.
Mhm. Okay, so next question sounds like maybe a cryptocurrency question more than a security token. So Michael, what happens when I trade my Bitcoin at 50K per coin, and when the price of Bitcoin goes up to 150, capital gains, taxes, and where does that gain go?
You need to get an accountant that's familiar with cryptocurrency. So I don't really know. I'm not selling mine. So, once Bitcoin dropped down to around, I bought it early, and then, from the 60,000, it dropped down to 48,000. I bought it at 48,000. I bought it at 44,000. I bought it at 34,000.
Your dollar cost averaged it all
the way down, but it's going to go back up. So because there's just, my theory on it is, it's just like a company going into the S&P 500. As soon as that company gets added to the S&P 500, all these institutions have to buy a piece of that company. So it automatically gets a pop. There's all these institutions that are now say you need 3 to 5% of your assets in cryptocurrency, and there's only so much Bitcoin to go around. I won't get into some of the other coins that I really don't, understand and won't invest in. But I do believe that Ethereum and Bitcoin are both very solid coins. And, I'm invested in Algorand, and I'm also invested in other blockchains like Tezos, and some of those that I think have a realistic cash flow expectation and a cash flow model. So, but there's other garbage that I shouldn't say garbage. I just don't understand them. And if I don't understand it, I have enough trouble. I know what real estate is, and I know how that works. And, so I'll stay with that.
Okay, can you talk about the mechanism to set up the NAV? Does the GP handle that item, and is there a third-party appraiser brought in on a regular basis to value the fund?
Yes. So we engage and I can't remember off the top of my head, it starts with an A, but we're going to have an international advisory firm, not international, sorry, a national advisory firm that, does valuations, value, I believe, on a quarterly basis.
Mm-hmm. And we had also a question on, I believe, the Blockchain Real Estate Summit. Is the website for it on? I think.
No, it's not. We just started putting it together. I've been trying to get my webmaster guy to get it up. He was supposed to have it up today. Evidently, they're not working in Romania right now, so I'll have to get on them tomorrow.
Okay. So got it.
So, but yeah, it's not on there. So unfortunately, it's not up, but we'll let you know. We'll let you know who the speakers are, and it'll be not only for investors, but also you'll get a lot more information about the industry from securitization platforms, from broker dealers, from people that are running ATS. We actually plan, and we're working with Algorand to have them come and talk about, blockchain and the dynamics of that. So, and we'll have some really good, we think, real estate, people that can talk about real estate, and not only raising capital for real estate, but also, excellent podcast hosts that have done things like this.
Awesome. That sounds great. And Mike, you're pretty international, right? So you mentioned Dubai, Romania. You seem to be like having like a more global, I guess, customer base, or like what?
I really want to tell you that your entire perspective changes. And I was hanging out. I am a resident of a country in Europe. It's a startup country called Liberland, and the entire thing is based on blockchain. And so I had a little bit more of an international bent, but with cryptocurrency and with blockchain, it is an international thing. It really doesn't know borders. And so there's people that are experts in, certain things. I'm really impressed by, and I'm trying to think of the name, Estonia. Estonia, their entire country is also doing things all on the blockchain, including title, including governance and things like that. And they've got, banks and stock markets. Dubai, it really wants to be in the UAE is really trying to be, cryptocurrency. And there's a lot of countries that probably the best country out there, the two best countries for digital assets in terms of like law and how they treat things and how good they are is Switzerland and Singapore. So both of them are very forward thinking. And the United States is a little bit slow. I'm going to kind of defend the United States by saying that, yes, there's a lot of bureaucracy, but also if they mess things up, they don't really want to. It's easier for a country like Singapore to kind of like make a mistake. But if the United States makes a mistake with something, then, so that's why they're extra cautious. I'm giving them the benefit of the doubt. Well, but they're a little bit slower. I really am impressed with Singapore, and also Switzerland, and Luxembourg is coming along too. And then there's other jurisdictions that are like really way forward. So the Cayman Islands, which is where our non-US fund is based, and also Seychelles and Gibraltar. But if you want like name brand countries that everybody recognizes as finance capitals, it would be Singapore and Switzerland are out in front. Although most of the tech, a lot of it comes from here.
So for example, your non-US fund, and we're over time, but let's say your non-US fund for investing in assets in the US and but investors from abroad, for example, does it need to go through some of the SEC?
There's a different tax treatment. Well, number one, we had to bring all the non-US investors in, through one place. And so that had to be domiciled outside the United States. And so that's why it's in Cayman Islands. But there's also different tax treatments for real estate ownership from US investors and non-US investors. So the non-US, ideally we wanted one token, but unfortunately, just because of the tax laws and the securities laws, we're going to have two separate tokens, one for US investors and one for non-US investors.
Got it. Okay, that was really great, Michael. That's so informative. I think I'm going to be rewatching it once again. That was awesome. So it's great.
I have a quick question. On those US tokens, is there, how is capital gains going to be worked into any of that? Because into this whole real estate realm, is there going to be a trail for capital gains? So somehow that.
Again, the US investors get a K1. So if there is a capital gain, or they're taking a capital gain, or we take a capital gain by selling all or part of the fund, that's all going to be worked through the US side of it.
Is that on the token side, or is that on the real estate side, or is it on both?
The individual investor has to deal with their own tax ramifications, but the US the entire fund does is set up to minimize taxes. So
the real estate holding itself, which you've established to hold, and then tokenizing it out, that ownership, when you have it and do something with it, are you saying you're going to take care of the taxes on that situation, and ultimately that relates into the token?
The fund will do the fund level taxes, and each individual investor, once they get their K1, if they're in the US, will have to work out their own tax situation, for whatever their tax purposes are. And
Again,
then
the K1, what I'm trying to say is, does the K1,
they would have to like do whatever, country they lived in, their taxes.
but what I'm trying to say is, again, when you own the property, and then you are tokenizing it out, whatever that property's doing, whether, with the leases, the income from the leases, if the property gets sold, does that property itself pay the taxes on that gain or loss? As far as whether it goes into the K1, I would like to know that before I invest, because if the K1 is just going to be related to my token, that's great.
See, Stephen, you're getting too deep into the token thing. It's just like you would have a share of a private real estate investment.
Okay, but I don't know how that works.
Okay, well, if you had a share of a regular syndication, you would get whatever. So let's say me, you, and Stefan decided to, form a partnership with the three of us. And you get 1/3, he gets 1/3, I get 1/3. So whatever the depreciation is, whatever the cash flow is, it's just all split. It's the same thing with the tokens, whether there's 10 tokens or 100,000 tokens, it's all split on a pro rata basis.
So you could be taxed twice, not only on the token, but also on the investment.
No, because it's a pass-through entity.
Oh, okay. Then you're not taxed on the relationship that we three of us have 1/3 of, because that 1/3 interest, each one, it will be taxed out by the entity itself.
I'm sorry.
So if you're selling a property, and you have ownership in that, whoever is going to have it, now you're tokenizing it out.
Right, but like I said, just forget about the whole tokenization thing. It's the exact same thing as it would be, is if you and I owned it as,
Outright.
Yeah.
So there's a gain on my token, and there's going to be a gain or a loss on the asset that it's holding.
Again, if the fund passes through the depreciation, the gains or the losses, then you would have a K1 that would show your share of the gains or the losses. And then you would have to report that income as, your accountant sees fit.
Right. Okay, I got it. I'm thick, but I got it.
Okay, Mike, thank you so much. This was really great. And we're at time, but it was really, thanks for taking the time to talk to us today. It was a very informative lecture, great information. And again, what are some of the ways you have on the screen to reach to you? If you would like to remind people to go to, I guess, libertyfund.io or
and we've got a special report. They can just, go to our website and, download the special report. And that is a nice, I think, 10-page special report on blockchain real estate. It covers a lot of the same things that we covered here. It's a little bit more in detail. If you want to contact me directly, you can just do it at hello@libertyfund.io. Really tried to make this as formative as possible as to, because I know it's a new thing. And, I hope we added some value. And I really, really, really appreciate you inviting me, Stefan. I mean,
Oh, absolutely. Yeah, it was great. It was really great. Like I said, I'm going to be, I don't know about others, but I'm going to be rewatching it and, taking more notes. So.
I think, if you don't have to jump into it right away. If you want to jump into it and see how it works, you could try us out, because it's hey, if you're an accredited investor,
absolutely.
You might want to get out of it, but you can also we're more than happy. I'm just trying to educate people, because I do believe that this is the way stuff is going to go forward. So if you do want to contact me, more than happy. We've got a lot of stuff on our website about, some of the stuff. Also got some Medium articles out there that list out, all the things of putting together a security token. And just really want to put as much information as possible out there, because I do believe that whether it's this year, next year, or 5 years, a lot of real estate is going to be, done this way. And the prices are going to come down.
Michael, is the fund open now, or is that something you're going to do?
The fund is open for investment now.
And what are the what kind of sizes are you accepting?
The minimum investment is 50,000.
Okay, and how much are you total you're raising?
Our goal raise is 30 million. Our hard cap is 100 million.
Great, thanks.
And like I said, if you have individual questions and you'd like to get more information or an investor deck, just contact me at hello@libertyfund.io, and I'd be more than happy to send you an investor deck and jump on a call to, just explain. What I tried to do is not do as much about the fund. I just wanted to talk about, for Stefan, not like an hour-long sales process, but, more about, blockchain and real estate.
Yeah, no, appreciate that. I'll reach out.
But do you guys, since you're in so many markets, just like before we close, still it's a question of more on the fund side, but do you guys, pick your own deals, or is it actually partnering and sort of investing in other sponsors?
No, we select all our own deals. We have more than, and we've got, probably a 75 metric list of things that we look for, once it gets past the underwriting, and I can tell you, since we've been doing this, retail is kind of like a national type of a thing. So in a lot of these markets, I actually know, the markets because we've operated, don't quote me on this, but I think we're around 20 states that we've operated in. And we've also, underwritten properties, I want to say, in a lot more states than that. We've probably underwritten properties in like 35 states. So we're familiar with the states that, we're investing in. And not only that, but, our team is dispersed too. So one of my partners is in Austin, Texas. The other partner are in Virginia. And I've got people working for me in Florida and South Carolina. So
in the retail space, is it more like broker relationships? There isn't much direct to owner, I assume.
There is, but in this particular, the one thing about net lease is it's a very efficient market. So there's a lot of turnover. There's a lot of properties that come on the market. There's a lot of properties that go off the market. There are probably, and they're not the big companies. They're probably like 5 really excellent boutique firms that do, specialize in net lease throughout the United States. And then we also have relationships. I've, again, there's an organization called the International Council of Shopping Centers. So if I don't know somebody, most of the time I know people in the state, so I'm familiar with it. So we have a lot of deal flow. At some point, it's like too much deal flow. It's hard to, keep up with the amount of things that people are sending us. And then the other thing is, and this is a key thing, we have relationships with the retailers. So it's not only about, is this a good deal, but if I can, get on the phone with somebody from Aldi, I can get on the phone with somebody from Dollar General, I can get on the phone, we're not buying them, but I know the people from Starbucks, and I can say, is this a good store for you? What do you think? And all the rest of it. And if it's not directly with the retailer, we have relationships with there's also retail tenant reps that are real estate brokers that we have relationships with them that a lot of them are nationwide. So between that, we've got a pretty good handle on, what's going on with the retail market, especially with these, the tenants that we're concentrating in.
Great. Thank you so much. That was awesome.
I really appreciate, the time and you put together so many great, stuff. I don't always get time to get on, but when you put it up on the YouTube, it's just fantastic. You've got some great, people talking about their stuff.
Thanks a lot. Yeah, really appreciate it. And yes, so with that, everyone has your information, so we can call it a day. It was really useful. Thank you again for joining us today, and thanks to everyone else who joined. Bye, guys.
Thank you. Thank you, Stefan.
Bye now.
Thank you.